uh, another question which is actually out of the subject. I know you have a vast experience in teaching even, and you have vast experience in trainings and all those things. So I have a small question. What do you think we as a professional accountants should do as a training part, or as what should we do, which areas should we look into that, so we will not be obsolete, get obsolete in next 3 to 5 years?
Well, honestly, I think we never agreed for these kind of sort of questions before the session. And I don't know, maybe if you get offended from this answer, but we both belong to the same fraternity, of course. I think we should not we should be less egoistic about our profession, which we are currently. Whenever you talk to some very professionally qualified accountant, and what I feel personally, humbly, it's my humble opinion. It can be slightly different from, of course, other people. But I believe that we are very rigid about our profession. We are very rigid about the changes.
So
It
accepting the changes.
accepting the changes, of course, and also accepting the opinion from the people who are not part of our profession. I have seen those instances where a mathematician was standing in front of me and he was actually telling me that I can be a better accountant than you because I'm a mathematician. I'm using AI software. I said, yes, you can be, of course. And there are reasons of to believe. Of course, there are excuses where they are actually coming up with a lot of reasons. What I personally believe, we should not be egoistic. That is number one. We should just start accepting the change which is coming, which is already there, by the way. And I'm not saying that it actually applies to all the accountants. No, uh, there are accounting firms in the market, and they are already, by the way, sort of going through the experimental phase. So I believe personally that we, being an accountant, we should not be egoistic about our profession. We should be able to accept the changes because change can be, there for the good. And the reason the change is coming, because it is actually going to give a new life to our profession, a new perception, a new, a reality is coming over there. There are multiple firms which are already testing the, audit bots to be put in the system of the account of the clients,
Clients.
and doing the, repeated auditing, right? And the actual concept of financial audit, where you used to send the guys to the client, the team, and the planning of the audit, inventory control, inventory calculation. We used to go on 31st December, to multiple
Yeah,
clients,
yeah,
and
yeah,
we
yeah. Do
used
the
to calculate
inventory count and
exactly
all
the
those
inventory
things.
count. So that concept is, going to be really obsolete now. And what I believe, that we need to talk to each other. We need to be more combined as a group of accountants, of course. And we need to talk about what is coming up. And yes, if someone is really afraid of the accounting profession getting obsolete, no, it is impossible. We are the backbone of a company. We are a backbone of a corporation, and we would definitely be there. And we know that how things work. So
Yeah.
the new upcoming accountants should be more focused on getting the professional qualification, and stepping into the experimental phase, right, really quickly.
Great, great. So let's come back to the subject matter. So there is some terms which are mentioned there in the under the corporate tax, like the qualifying group.
Yeah.
So what is meant by qualifying group? We
So
we have a little bit idea, not a little bit, quite an exact idea of qualifying income and
correct.
qualifying free zone and qualifying entity from your last session. So what is the qualifying group exactly is?
So there is a difference between the tax group and a qualifying group. The tax group is kind of registered within the system, and you actually declare that as a tax group when you have a parent and subsidiary relationship of 95%, right? But then, if you do not have that kind of a structure, but still you have multiple companies within the group, so you can actually declare your group as a qualifying group. But the qualifying group criteria is not 95%. That actually goes down to 75%. Now, when I say qualifying group, that means you have multiple companies, and one of the company of all the groups actually maintains a certain shareholding and that is basically 75% or more than
Minimum.
75%,
Minimum.
minimum,
Minimum.
exactly.
Okay. Okay.
Or any third party, maybe outside the group. They actually are maintaining the shareholding of more than 75%. So you can declare your group as a qualifying group. Now, what is the exception?
Mm-hmm.
Here, you will actually register your entity individually. You will file the returns individually, separately.
Mm-hmm.
But there are reliefs, and there are big reliefs within this group.
Mm-hmm.
Why? You can actually shift or transfer your assets and liabilities between the books of one entity to
To
another entity, but it has to be on the net book value, or maybe a certain
the criteria
standard
of that
criteria
one.
is there, of course.
Mm-hmm.
But it's a big relief, by the way,
Mm-hmm.
when you can actually shift your liabilities and assets between the tax group, between the qualifying group instead of tax group, of course, and you're filing the return separately, and the separate return or calculation criteria would apply. The basic exemption criteria of 375,000 dirhams would apply to each entity. But definitely, you can actually declare that as a qualifying group and can actually believe that, or you can follow the criteria, of course, and you can get the relief. But this is not going to be a tax group. Tax group is something where you actually declare that and register it.
They have to file the return separately.
They have to file the return separately. They have to
Okay.
register separately. They have to file the return separately.
But
But they can
they
only be declared as a qualifying group once
okay
they have the 75% relationship.
once they have the 75%
Correct.
relationship. Okay.
I think let's quickly jump to the second part. I need to recap from the previous sessions. It's more important because we have less time now. Free zone persons, if you remember that we had a very long discussion. We have our sort of episodes being available on the YouTube. We are not techie guys, so of course our YouTube channel is kind of very. Anyways, if somebody wants to go and refer back to the discussions of free zones, of course they can actually go back. But I think it's important that we just quickly define that exactly. We have to recap it. When you say that free zone, of course, everyone knows that what is free zone company, how it actually complies, and how you can actually declare that. Is there, if I just shoot the question right away, what is the exception available for the free zone companies?
So they are, but we have to understand this is not free zone. This is a qualifying zone. The exceptions come under the qualifying zone. So a company which is registered. So there are three levels: qualifying zone, qualifying entity, that qualifying zone entity, and qualifying income. So we have to have check first three tick marks. Okay, we are under the qualifying zone, qualifying entity, and we are earning a qualifying income, and then we can move on. Then we can get entertained with the 0%. But the important thing is there are other criterias in regards to the qualifying income. First, we have to to approach that areas, that criteria. We meet that criteria of qualifying income. If someone meet that criteria, okay, fine, then they can move on to 0%. So this is how in nutshell the qualifying free zone person and qualifying income is. That we have a long discussion on the qualifying
Absolutely.